today we have this company I've been looking at. It's called First Dibs. Basically, they're an American e-commerce company. It's an online marketplace. They sell luxury items such as high-end furniture for interior design, fine art, jewelry. They have vintage bags, super expensive. They have Birkins here. I just wanted to go over this stock tonight because the other day, we just went over Restoration Hardware and how they're having a little bit of trouble right now. Running low on cash, they're increasing their debt. And this company, we're going to kind of compare. So everything on the First Dibs website, First Dibs doesn't own any of this furniture. They don't own any of the bags. They pretty much just created the platform where people could sell their items. Now, when you compare it to Restoration Hardware actually sells the items themselves, which makes it more difficult to get rid of inventory versus First Dibs, where they pretty much just take a cut from sales. Let's go ahead and look at some numbers. Selling at a $95 million valuation. $95 million. Going for $2.68. If you take a look at the max chart right now, it looks like they IPO'd in 2021 and the stock's been doing nothing but crash. And it's crashing right now with the market down below $3. So is this a good stock to be purchasing at a $95 million valuation? Are we getting a good deal investing in this company, or if we're looking at this company? Now, the biggest advantage that First Dibs has is because they are a tech company. They have a chance of creating exponential growth versus companies like Restoration Hardware, who have to rely on physical stores for their growth. With First Dibs, they could deploy their website anywhere in the world versus Restoration Hardware. They have to spend more on capital expenditures to expand their stores. They have to buy more real estate. They have to actually curate their furniture, unlike First Dibs, where users of the network pretty much provide their furniture, their fashion, their watches, their jewelry. They don't have to provide anything but the platform itself. I would recommend watching the Restoration Hardware video first. It would be a good start before you sort of finish this video. I am going to be going back and forth and relating First Dibs and Restoration Hardware. But yeah, let's go ahead and start. So the main problem with Restoration Hardware and First Dibs is the economy is pretty much operating in one of the worst housing markets in almost 50 years, and that is pretty much what's affecting Restoration Hardware. It's actually also affecting First Dibs, but basically people are buying furniture less. They are not purchasing houses, and now we are expecting a higher risk business environment because of all the uncertainty caused by the tariffs. There's market volatility, there's inflation risk, basically just all these things that are going to pretty much affect these styles of companies. And so one of the first things I want to look at is going to be the relative valuation versus the amount of cash that the company holds. There we could figure out the cash position to see if we could buy the shares at a discount. Again, First Dibs is currently selling at $2.68 at a $95 million valuation. Now check this out, guys. When we take a look at the cash, they have $103.9 million in cash with zero long-term debt. Now we're going to go back real quick and check out Restoration Hardware. Check out the amount of cash they have. They only have $30.4 million in cash versus $2.5 billion in long-term debt. Now compare that to First Dibs, who has $100 million in cash. So triple the amount of cash Restoration Hardware has with zero amount of debt. Restoration Hardware is selling for $2.7 billion, while First Dibs is only selling for $95 million. So First Dibs pretty much carries triple the amount of liquid cash versus Restoration Hardware. They have more cash they are holding than what the whole company is worth. That's pretty much a net. Now, this is the cash position right here. If we take the cash, subtract the zero debt, we'll have $103 million in cash. And we're going to take a look at cash per share. We're going to divide the 103 million by 35 million shares outstanding. That gives us 2.90. So if we just take the cash alone, we could pretty much get almost $3 per share, while the whole company itself is selling for $2.68. Now, I'm not even counting the platform costs, how much the intangibles cost. Again, that's going to be a little bit longer video, but I just wanted to take a look at the cash position just to compare both companies and see where you could kind of see the difference between the valuation. All right, and then one other thing that I like with what's happening with First Dibs, we're starting to see some improvements on their cash flows that they have been reporting. So pretty much for the past 2 to 3 years, they've been reporting negative cash flows. So fourth quarter of 2024 in December, this is the first quarter where they actually posted positive cash flow from operations and positive free cash flow per share. Cash flow from operations, they posted 2.8 versus negative 2.1, up 233% year over year. and also with free cash flow per share 0.07 versus minus 0.6, that is up 216% year over year. So we're starting to see a move towards positive free cash flow for First Dibs, which is a great sign. The price of a stock will usually follow the trend of the free cash flow per share. So we're finally starting to see positive cash flows with First Dibs. This is a great sign. But other than that, total revenue, it's sort of been flat. I mean, they had 9% growth year over year, but earnings per share down 100%. Now, the third thing that I like about First Dibs, the company itself recognizes that there is a continued disconnect between the rising confidence in the business and our assessment of intrinsic value compared to the market price of the stock. So what they're doing with all the extra money they have, of course, is share repurchases. And in 2024, they repurchased 5.6 million shares for $28.1 million. Since launching the first ever share repurchase program all the way back in 2023, they have repurchased 6.4 million shares for a total of 30 million. And then at the end of December, they pretty much have 3.8 million of the outstanding authorization left. So they are still continuing to repurchase their shares. Just a quick little video that I just wanted to point out some things. So number one, over 100 million in cash while their market cap is selling way below their cash. Number two, they just hit free positive cash flow for the first time, and they will be able to funnel that either through expansion of the business or the repurchase of more shares, meaning this stock price could finally turn around and go back above the IPO price. And last but not least, I like companies that do a lot of share repurchases, and I like how they're doing repurchases right now, but they're not too aggressive with it, unlike Restoration Hardware, who had pretty much $2 billion in cash 3 years ago, and now they're down to 30 million. But yeah, let me know what you guys think. Is this a good under $3 stock that we should be looking at? Do a more deeper dive into and see how the company really is. But I just pointed out those three things right now. $95 million valuation at $2.68. They are a software company providing this platform for people to sell their goods and services. It's an e-commerce platform. Pretty much you could buy some vintage, rare stuff on this website. So definitely check this website out and let me know what you guys think. Thanks for watching.